Thailand, the country that fooled everyone. Vietnam grew 7% last year. Indonesia, 5%. The Philippines, 4.5%. Thailand, 2.4%. Dead last in Southeast Asia. And the forecast for 2026 is worse. The IMF just cut Thailand to 1.6%. Household debt is 90% of GDP. Inflation has gone negative. Tourism revenue is still barely half of what it was before COVID. The stock market dropped 23% in 2025. Worst performing major index in the world. Every economist, every analyst, every YouTube channel covering Asia has reached the same conclusion. Thailand is finished. I know, because 6 months ago, I almost said the same thing. I've been working in Asia for 26 years. I've watched economies rise and collapse from the inside. And when I sat down with the Thailand numbers last year, I felt something I hadn't felt in a long time. Doubt. I actually pulled up a map of alternative jurisdictions for a client. I had already drafted 3 bullet points for why Vietnam was the better play. Then something stopped me. A data point so out of place it looked like a mistake. Thailand's Board of Investment had just recorded the biggest year of foreign capital in its entire 60-year history. $42 billion, up 67% from the year before. I thought the number was wrong, so I called someone I trust, a senior executive at one of the firms behind that investment. His answer changed everything I thought I knew about this country. He said, "Victor, you're reading the wrong Thailand. There are 2 Thailands right now. One is dying. The other is being built. And the people writing the obituaries have never been to a factory floor." Somebody in this story is obviously wrong. Either it's every economist, analyst, and commentator calling this a dead economy, or it's Amazon, Google, Microsoft, and BYD, collectively committing billions in capital in the last 18 months. When the headlines and the money disagree, the money has done its due diligence. In this video, I'm going to show you the Thailand that actually exists behind the numbers, where the real capital is going, who's driving it, and what it means if you're running anything that touches Asia. This channel is where I share what I see from the inside, the stuff the headline writers missed. Subscribe if that's useful to you. Before I show you what's actually happening, I need to do something most channels won't. I need to make the bear case as strong as it possibly can be. Because the people calling Thailand finished, they're not stupid. They're looking at real numbers. And anyone trying to sell you a pretty picture of Thailand right now without acknowledging those numbers is either lying or hasn't done the work. So let's start with the ugly stuff. All of it. Thai households owe almost as much as the entire country produces in a year. 90% debt to GDP, one of the highest ratios in Asia. When you owe that much, most of your paycheck is gone before it lands. Thai families eat out every day and line up for the latest iPhone. They're doing it on credit, often at interest rates that would be illegal in most Western countries. Banks are tightening because default risk keeps climbing. Consumer loans have shrunk 4 quarters straight. The banking system has posted 6 consecutive quarters of negative loan growth, the longest stretch since the 2009 financial crisis. That's not a slowdown. That's a slow-motion squeeze on an entire middle class. Thailand's inflation has been negative for 12 months straight. I know what you're thinking. Prices falling sounds like good news. It's not. Tourism used to be Thailand's life jacket, the thing that held everything together when other sectors struggled. It's no longer working. Chinese visitors, once the lifeblood of Thai tourism, collapsed to less than half of pre-COVID numbers. The scam compound scandals and a single Netflix documentary destroyed Thailand's image in its most important source market overnight. But the real problem isn't just the volume, it's the math. Even the tourists who do come are spending less. Hotel rates went up, the baht stayed strong, budget travelers now see Vietnam and Indonesia as better value. The average hotel, restaurant, or tour operator is still stuck at 44% of what they made in 2019. Malaysia has now overtaken China as Thailand's top tourist source. That single sentence tells you everything about how fast the visitor profile has shifted. Not recovering, stuck. And then there's the number that tells you how global capital actually feels about all of this. In 2025, Thailand's SET50 dropped 23%. Worst performing major index in the world. Foreign investors pulled over 100 billion baht in net outflows. Trading volumes hit a 20-year low. A series of corporate scandals, Stark, JKN Global, Energy Absolute, wiped billions in shareholder value and shattered what was left of investor trust. When global investors look at Thailand, they don't just see risk. They see risk they don't know how to price. And underneath all of it, there is a slower, more fundamental problem. One that doesn't show up in quarterly figures, but shapes everything for the next 30 years. Thailand's fertility rate is now lower than most of Europe. The working age population started shrinking in 2019. By the 2040s, the country could be losing 1% of its workforce every year. An aging population means fewer workers paying taxes, more retirees drawing pensions, slower productivity growth. Thailand is aging before it finished getting rich, and that is a very hard hole to climb out of. I know, that's a lot. Add it all up, and yes, the picture is genuinely far from perfect. So I want to be clear, I'm not here to tell you Thailand is a guaranteed winner. I'm here to tell you that the people writing its obituary made one critical mistake. They confused the Thailand they could measure with the Thailand being built in parallel. And those are not the same country. In April of this year, Moody's, one of the three major credit rating agencies whose entire business model is being right about risk, upgraded Thailand's outlook from negative to stable. The reasons: easing tariff risks, structural reforms, and what they called, and I'm quoting directly, sustained momentum in foreign direct investment. An agency that gets paid to be skeptical looked at the same country everyone on YouTube just buried and decided things are stabilizing. That doesn't happen by accident. Moody's doesn't upgrade countries out of optimism. They upgrade them when the evidence on the ground forces them to. So what are they seeing that the headlines are missing? The answer comes down to three specific bets. But before I show you the capital flows, let me show you what those bets look like from the factory floor. Let me introduce you to someone you've never heard of. I'll call him Marcus. He's asked me not to use his full name. Marcus is a procurement director for a mid-sized German electronics manufacturer. In 2021, 94% of his company's PCB supply came from factories in Shenzhen and Dongguan. In January 2023, he flew to Thailand for the first time. Not a vacation, a site visit. I landed in Bangkok expecting to be underwhelmed. I drove 2 hours east to Prachinburi and walked into a facility that was cleaner, more automated, and more technically advanced than anything we had in China. We months of our sourcing in 18 months. We're at 65% now and we're not done. The headline number that year said Thailand's economy was dying. What I saw on that factory floor said the opposite. Marcus is not an exception. He is a pattern. Start with where the biggest checks are being written. In January last year, Amazon launched its first ever cloud region in Thailand. $5 billion committed over 15 years. 3 data center zones, full infrastructure. AWS estimates the project adds $10 billion to Thai GDP and creates 11,000 jobs a year. Exactly 1 year later, Google followed. $1 billion investment, new Bangkok cloud region. Projection: $41 billion in economic value to Thailand over 5 years. Microsoft announced $1 billion plus over the next 2 years, specifically for cloud and AI infrastructure. ByteDance committed several $1 billion to Thai data hosting for TikTok's regional operations. Now here is the statistic that stopped me cold when I first saw it. For the first time in Thailand's history, digital infrastructure became the single biggest category of foreign investment. Bigger than electronics, bigger than automotive. Let that land for a second. A country better known for beaches and car factories just became one of the most important data center hubs in Southeast Asia, and almost nobody in the Western business press noticed. These are not speculative bets. Amazon, Google, and Microsoft spend months, sometimes years, in due diligence before committing capital of this size. They don't do charity, they do returns. What they saw in Thailand was not a dying economy. They saw infrastructure, geography, stability, and a government that was willing to move. Now the car story, because this one is even more visual. You probably heard BYD built a factory in Rayong. Here's what you probably didn't hear. In August 2025, a BYD Seal rolled off the Rayong assembly line. It was loaded onto a cargo ship in the Gulf of Thailand. It arrived in Rotterdam 6 weeks later. Then it was delivered to a dealer in Germany. That supply chain did not exist 3 years ago. Today, it is delivering cars directly to Germany, Belgium, the Netherlands, and the UK. BYD is just the loudest name. Great Wall Motor dropped $647 million into a Thai plant. Chang'an added close to $300 million. GAC Ion, Chery, MG, all building. Chinese brands now control close to 85% of Thailand's EV segment. BYD alone holds around 40%. What is actually happening here is not a car story. It's a geopolitical story expressed in sheet metal. Thailand has become the back door into European markets for Chinese manufacturers navigating tariffs. The Detroit of Asia is being reborn, not with Japanese car makers this time, but with Chinese ones, using Thailand as their tariff-free gateway. The cloud story is big, the car story is visual, but the one that actually stops people cold, the one that nobody is covering, is this. Open your phone right now, or your laptop, or any server running anywhere in the world. Inside it, there is a green rectangle, a printed circuit board. There is a very good chance that rectangle was made, or is about to be made, in Thailand. Since 2022, more than 200 billion baht has poured into Thai PCB manufacturing. 7 of the 10 largest Chinese PCB makers have set up operations in the country. In January, Gending Tech, the single largest PCB manufacturer on Earth, got approval for a $2 billion joint venture in Prachinburi. High-density circuit boards for AI servers. 5,600 jobs. Western Digital expanded its Thai operations. Delta Electronics moved part of its North American production to Thailand, specifically to dodge US tariffs on Chinese-made electronics. This is the China Plus One strategy becoming real, right now, in factories 2 hours east of Bangkok. Vietnam got the low-cost assembly. Thailand got the capital-intensive, technically complex, high-margin work. It doesn't show up on tourist Instagram, but it is worth more than every beach resort in Phuket combined. This is what Marcus saw on that factory floor in Prachinburi. Not a struggling economy running on cheap labor. A precision manufacturing ecosystem quietly positioning itself at the exact center of the global AI supply chain. Now I need to stop and say something that the people selling Thailand will not. The transition is real, but it is not complete. And the cracks are significant. The big infrastructure projects that are supposed to tie everything together, the high-speed rail connecting Bangkok's 3 airports, the Utapao expansion, the deep seaport upgrades, are years behind schedule. For every Marcus who flew to Prachinburi and moved his sourcing, there is a procurement director who flew to Prachinburi, saw the infrastructure delays, and booked a flight to Vietnam instead. The household debt problem is real. The deflation trap is real. The demographic cliff is real. None of what I've shown you makes those problems disappear. What it does is change the question. The question is no longer, is Thailand struggling? It clearly is. The question is, which Thailand are you investing in? The one that's suffering or the one being built in parallel? Those are not the same bet. Here's what nobody is telling you about the timing. The positions are being taken right now. Amazon moved in January 2024. Google followed exactly 1 year later. BYD was operational in 16 months. The PCB cluster arrived in a 24-month window. That clustering is not coincidence. That is sophisticated capital recognizing a window and moving through it simultaneously. The entrepreneurs who understood Thailand 5 years ago are already 2 years ahead of everyone figuring it out today. I'm not saying that to create panic. I'm saying it because every major industrial transition I've watched in this region has run the same way. The window opens. The early movers take their positions. Then the window begins to close. Not because the opportunity disappears, but because the best positions get taken. Where are you in that sequence right now? Before anyone called it the world's factory floor, before the headlines caught up, when it was just a place where serious money was quietly moving. Shenzhen in 2003 made some people very wealthy. It made the people who waited for the headlines considerably less so. I've been on the ground in Asia for 26 years. I've watched this pattern run before. I know what it looks like when money moves before the story does. I'm not telling you Thailand is the next Shenzhen. I don't know that. Nobody does. What I know is this. The people who get there after the headlines are the ones who read the headlines. The people who get there before are the ones who read the factory floors. Drop what you're seeing in the comments. If you're on the ground in Thailand, in the supply chain, in the capital flows, I want to know what you're looking at. That's the point of this channel. Not the headlines, what's underneath them. Two Thailands exist right now. The one everybody's writing about, and the one everybody's building. You just have to decide which one you're reading.